Here with this week's hottest stories in the investment world, this is Zacks Friday Finish Line.
Hello and welcome to the Zacks Friday Finish Line. I'm Ryan McQueeney, a content writer here at Zacks, along with one of our editors, Maddy Johnson.
Today is Friday, March 3rd, and this weather has been absolutely rude this week in Chicago. I just can't believe it. I'm just over it.
Exact opposite story of last week.
Yeah. I'm just
shaking my head, Chicago.
Simply rude. So we're here to recap this week's biggest stories from the investment and financial world, including what could be one of the biggest stories of the entire year, the highly anticipated Snapchat IPO.
Yes, so we've previewed it, I would say ad nauseum is the phrase.
Yeah.
We've talked about it.
Just a few times.
But now that it has finally happened, we will take a look at how Snapchat performed on its very first day of trading. But first, let's take a look at some of the other top stories from this week, including earnings news from Target.
Yes, one of my favorite stores. I always go in, spend at least $100, and I'm always somehow shocked when I get to the register. It really shouldn't be at this point. So on Tuesday morning, before the bell, Target released its relatively terrible fourth quarter earnings report. I think that's putting it nicely.
Yeah, that's exactly what I was going to say.
So they posted adjusted earnings of $1.45 per share, which missed the Zacks estimate of $1.50 per share and declined 4.6% year over year. The company also posted a revenue miss with total sales of $20.69 billion that just fell short of our estimate of $20.746 billion and decreased 4.3% year over year. Comparable store sales decreased 1.5%, gross profit fell 7.6%, and operating income fell 13.5%, though e-commerce sales increased 34% year over year, which was one of the few bright spots of the report.
Yay.
Yay. But one of the biggest surprises came from Target's announcement that it would move its prices even further down market into the realm of top rival Walmart and accept lower profit margins as a result. Now, I think this is just really interesting because Target has always been kind of this allure, this big box store that has kind of drawn in or lured higher income shoppers. Mm-hmm. So this announcement...
Compared to Walmart, especially.
Compared to Walmart, yeah.
No offense to the people who shop at Walmart.
I mean, there's a People of Walmart Facebook page that is like, just an embarrassment.
It's a meme.
So this is one of the biggest reasons why Target stock was down, or is down nearly 13% since the report came out on Tuesday. And Target's share price has plunged the most since December of 2008, which I thought was a really interesting stat. But it's definitely also very risky. So while cutting prices may draw more people in the door, it may also alienate consumers seeking a more upscale retail experience, which I just mentioned. Target, or Target, which my mother. Did you see I went
traveled
fancy?
To Europe. This is now a European show.
My mother always likes
and our mums
to dub it its faux French nickname, right? It's known for drawing that affluent customer with its hit product, its designer collaboration, and its low-ish prices, right? Yeah, because it's always $100 out the door. And they actually have a collaboration with Victoria Beckham coming this spring, which I'm very excited about.
Very posh.
Yes. So Target is now following in Walmart's footsteps and is working for Walmart, surprisingly. Yeah. If you remember, we covered
week when we
Walmart's,
talked about their earnings report.
So Walmart, after a year and a half or so later, plus the $6 billion spent to lower prices, Walmart reported its highest quarterly same-store sales increase in more than 4 years. So Target is probably thinking, well, if Walmart can do it, we surely can.
What gives, huh?
Right?
Yeah.
And interesting, this week, Walmart announced that they're taking this price comparison or price drop initiative to its grocery aisles, where it's testing a price comparison test in as many as 1,200 stores in the hopes of closing the price gap between itself and top competitors like Kroger and especially Aldi. And in the cities, they're testing it in 11 cities, and 5 of the test, Reuters did this huge report. It was really interesting. And 5 of the cities where they're testing it, it's actually working. And if they can get prices lower than Aldi, I'm in. I mean, that's really impressive.
Yeah, definitely. impressive for
Walmart. And if if Target can follow in these footsteps, then maybe there's a light at the end of the tunnel.
Yeah, Target investors certainly desperately searching for one of those.
Right. But it's also a reason why, again, the stock fell so much and they were like, whoa, what is happening? This is not what we expected.
What's really interesting to me, too, is that when we talked about Walmart last week, we talked about them being able to post comps growth in the quarter. And, the big story there was they invested all this money into building out their online marketplace platform, and they saw really impressive sales growth in the e-commerce segment. Target matched that, if not outperformed it with e-commerce growth. But the issue was they did not see that alongside comps growth. And so Walmart being able to get more people into stores and spending more in the stores alongside shopping online more. Target having difficulties. If I remember correctly, I don't have the note in front of me, but if I remember correctly, a slight uptick in traffic in the quarter, but saw an average ticket decline, which was kind of a significantly different story than what we saw last week with Walmart. And if we're talking, they're having issues with average ticket declines, is going head to head, doubling down on your war with Walmart and their very competitive pricing strategies. Is that really going to help in the long run or in the short term at all? So I don't know. I'm not pumped now about Target.
Well, really, these moves are really just to try and compete with Amazon.
True. Yeah.
Is what it comes down to. But moving on, we're
going to talk about President Donald Trump, one of our favorite topics on this show. This is an episode full of things we talk about all the time.
Yeah, so exciting.
Big retailers, President Trump. We've got some video streaming slated for later in the show. Snapchat, it's just wonderful. We should talk about Chipotle at some point. Remind me to talk about Chipotle. Right. But yeah, so President Donald Trump directly addressed the United States Congress for the first time on Tuesday night. Not a State of the Union address, by the way. I thought it was going into it. Right. I was told that there was something different about this. But he's in Congress.
It was everything.
Same seating arrangements.
But a State of the Union.
Right, yeah. So I don't know. I think it was just semantics is the difference. But so anyway, as per usual, he had a lot to say about his personal effect on the country's current business environment. He said, quote, "Since my election, Ford, Fiat Chrysler, General Motors, Sprint, SoftBank, Lockheed Martin, Intel, Walmart, and many others have announced that they will invest billions of dollars in the United States and will create tens of thousands of new American jobs." End quote. Just gonna quick aside here. No mention of Amazon. No mention of Amazon.
Well, Jeff Bezos does on the Washington Post.
They're not good friends.
They're not good friends.
No mention of Amazon, who also was among companies that have recently announced lots of new full-time American jobs. Just gonna say, it seems like a personal problem between them two. They should flesh it out over a round of golf. Anyway, I actually this surprised me is how I'll phrase it. The biggest mover following speech, looking specifically at Trump mentions these company names, the stock goes moving, whether that's a smart thing by the markets or not, up for debate. The biggest mover following the speech was one that was not included in that quote. That's motorcycle manufacturing giant Harley Davidson. Personally, not a Harley guy myself. Don't think I would be able to balance on a motorcycle. They scare me to death. But the president did take time to single out this American icon of a company for praise.
That's a good way of putting it.
Yes. He said, quote, "I just met with officials and workers from a great American company, Harley Davidson. In fact, they proudly displayed 5 of their magnificent motorcycles.
Good alliteration.
Made in the USA on the front lawn of the White House." So that was the end of the quote, by the way. Sorry. Okay. So he singled out Harley Davidson, praised them for, similar things, keeping jobs in America, growing American jobs. These are some of his favorite talking points, as we know. shares of Harley-Davidson, which, great ticker alert, shares of Harley-Davidson, which trades under the ticker HOG, which is a term used to describe motorcycles, hogs.
Aren't one of their, don't they have like a pig as like part of their symbols?
I don't know. I don't think I'm familiar with like the Harley-Davidson insignia.
I'm pretty sure part of their logo is like a pig.
But I know that choppers are terms for like chopper is that type of motorcycle. People call those hogs. I don't know for what reason. No, we are really showing our lack of knowledge in the motorcycle manufacturing game right now. But we live in Chicago. There's not a ton of people driving around motorcycles.
I see more people on scooters and those razors.
Things. Yeah.
Literally just zooming in the middle of crowds during rush hour. Love it. Love it.
I don't like it very much, to be honest. I could sense your sarcasm. But,
I hope you would sense your sarcasm.
So anyway, also from the Trump speech, I'm just going to call it the Trump speech. Wasn't the State of the Union, I don't know, address to Congress.
I think you would like it if you called it the Trump speech.
Yeah. So quick note on revamping the U.S. tax system. He said, quote, "My economic team is developing historic tax reform that will reduce the tax rate on our companies so they can compete and thrive anywhere and with anyone," end quote. More kind of continuation of the rhetoric established throughout his campaign, and then also very clearly in his inaugural address. American businesses first, tax reform to support American businesses being a key part of his administration. So, not the most headline-worthy Trump speech of all time, but one that once
presidential.
Yeah, very presidential from
even though he's been president for accounts. Over a month.
He's learning. Yeah, he's learning. He's good at the teleprompter thing. I think a lot of the problems he's gotten into with saying "oops" mistakes things were when he gets off track. So maybe he should just keep a teleprompter with him at all times, because I think all of the response since the speech has been at least positive in that it was one of his more presidential, official, well thought out speeches that he has given. So tip of the cap to the Donnie. I was going to say something funny and then it didn't come to me. So anyway, moving on. We've got a surprising bit of news from the folks over at Alphabet Inc. / Google.
So on Tuesday, YouTube announced YouTube TV.
I wonder what it is.
I don't know. So, which is their service to disrupt traditional cable providers. So for $35 a month, users will be able to stream major broadcast networks like CBS, ABC, NBC, and Fox. Users will also get YouTube's original programming and sports networks like ESPN, which could be a good thing for ESPN, as we all know, struggles just awesomely.
We've talked about that ad nauseum as well.
So the service will be available to stream on your phone, tablet, computer, or any other products you might have that are compatible with Google's Chromecast. And the subscription also includes a cloud-based DVR with unlimited storage, artificial intelligence-based search, which that sounds very official, personalization features, and access to YouTube Red exclusive programs. So YouTube TV joins other programs like Dish's Sling TV, Sony's PlayStation Vue, and AT&T's DirecTV Now as options in the online live TV streaming playing field. It's like another competitor. That doesn't sound very just doesn't sound very appealing to me whatsoever.
That's interesting. I have the exact opposite reaction to it. I think it's really a good sign for the industry, and I think now better time than ever to be a cord cutter. If you're someone who doesn't have cable,
I completely agree with that.
You've got the most options ever.
But YouTube?
Yeah, YouTube. Google.
But the thing is, so for me, when I watch TV, like I just don't watch TV on my phone, tablet, or computer.
Okay.
I watch TV through my Roku app on my television.
Right, but if I have a Chromecast, then that's what I'm basically doing with all of those devices, right? Because if I'm Chromecasting, then I'm already familiar with
So
the Google.
is Chromecast then?
It's a Roku type of thing as well.
Okay.
You plug it into your TV and then you you sync it up with your Google enabled products, so your YouTube, anything that you're using.
Can you also get like Netflix, Hulu, HBO Now?
Yeah, you can all of these. So instead of Roku, where it's like you go and you go to that whatever input you have your Roku plugged in,
right?
And you have its own kind of app type of situation. Chromecast is more.
Does it have a
synced up with your phone or your laptop or your computer, and then anything that is Chromecastable, as I like to call it, will give you an option to sync it to Chromecast and then go to your computer. So like when you go to Netflix on your phone or your laptop or whatever, it'll like have a little Chromecast symbol in the corner, and then you can click on it, and then it'll send it to Chromecast.
Okay, so does Chromecast have? Is it like part router? Part like Wi-Fi router?
No.
So do you also need a Wi-Fi router?
Yeah, so you're using your same connection, Wi-Fi connection that you are connected to for whatever device. So I guess technically it could work too if you just are streaming over data, but you're in your home, so normally
just use your Wi-Fi.
Yeah.
Okay.
So that's why I think that YouTube TV, from a Google perspective, they're excited about that, getting people interacting with
Definitely.
Chromecast even more, especially because not only are people familiar with Chromecast, but even if, which your kind of question was YouTube, is that at the very least people are familiar with the name YouTube and they're familiar with the platform. It's not go get DirecTV Now or Sling TV, where maybe there's a little bit more of a learning curve for the user experience. Not that I'm saying that those things are difficult things to use, but YouTube, most people use semi-frequently, I would say. It's one of the internet's most popular websites. So
I mean, I guess, but I feel like I would. But then I feel like I would go to like an AT&T DirecTV Now before I would go to a YouTube TV. I feel like it would like there's a sense of security with it.
That's fair enough. I won't question any motives for the other options. But I will say that I think that there are so many options is a good sign, especially for companies like Disney that have been struggling with losing people to their networks like ESPN and ABC, who, if you remember the last time we talked about Disney's latest earnings report, they made mention of services like Sling TV and DirecTV Now having a positive impact on ESPN subscriptions. Yeah. And so having another major player in that field, one with the brand recognition of Google and YouTube at a competitive pricing point that's offering live ESPN and has these cool, cloud-based DVR with unlimited storage. Your unlimited DVR storage, that's pretty cool, right? I like it.
Yeah.
I like it.
Definitely.
Artificial intelligence-based search, not really sure what that means. But
it sounds cool.
Sounds cool.
I definitely don't disagree with all of it you said, but I guess like right now, like the way I watch TV, I wouldn't switch to any of these options also.
Sure. That's fair enough.
But I also don't have cable.
So you're already a cord cutter.
I'm already a cord cutter.
And you're already comfortable with the options you have.
Right. So I'm a Netflix. Well, not right now, because there wasn't anything on Netflix that I wanted to watch. So I'm like, I don't want to pay the fee. I'm gonna resubscribe when House of Cards comes back on in May. That's my plan. But I'm a Hulu subscriber. I'm an HBO Now subscriber. I have a Roku, and then I just go from there.
Yeah, but so that is one of the many options that cord cutters have, is to kind of bundle some of the individual packages that they like and
pick
need.
And choose.
Right. And kind of make it your own personal thing, and it's still very cheap in comparison to a traditional cable package. But if you're still thinking about, so for example, me, I will say in my current apartment, we have a cable subscription. It's like the bundle lump in the internet thing. We've got Comcast. It's wonderful. I say wonderful sarcastically. Shouts out all my other Comcast customers out there. But this summer I'll be moving and I'll be faced with the what do I want for my new package type deal. And now do I first of all, do I need cable anymore at all? Do I want something like this as opposed to something like, because if I haven't, what I'm saying is, I guess what my point is, if I haven't made the cord cut yet, this is now yet another option I have that's cheaper when I'm doing my cord cutting. And I think for someone like Netflix, it's not even a problem of new competition because
they don't really
I still need Netflix if I get this.
Right.
You know, how am I going to watch my Netflix exclusives? So, and that's the benefit that they will now have for investing so much into original programming is now you have those fan bases, and even when stuff like this comes along, you still I'll be paying $35 a month for YouTube TV plus my $10 for Netflix, and now I've got my package that I like.
Right. And I do want to say, like, I'm not a huge live TV person. I don't care about live sports. Whatever.
Sure,
that's whatever to me.
Sure.
And all of my shows on ABC, all of my stories, if you will, I just wait for the next day. Like, there's nothing pressing I need on live TV except award season, right? And then I just go to my friend's place.
But that's and that's
and
exactly
also,
why those networks have
had
such a hard time.
They have live streaming.
True.
And then I just use my parents' cable subscription because my father is not cutting the cord. Let's be honest.
That's true. Fair enough. I will say that your experiences are definitely why your experiences are mirrored by many, many people, and that's why a lot of these networks are struggling, especially when you look at ESPN, because so many people are like, okay, I can sacrifice having college football on in the background all day when I'm really not watching it because I don't actually really care about live events that much, and I can save some money on my cable.
Or if I do want to, like, if I do care about a football game or something during the NFL playoffs, I'll keep up with it on my phone.
But now, I will say, for the longest time too, the response to that is you either have a cable package and you watch ESPN, or you don't have any other options. And for a very long time, there wasn't a lot of cord cutting options that could keep you up to date with live sports.
Exactly.
And now there are, which is good news for Disney and ESPN for sure. We'll see whether this works out in the long term for Alphabet and the Google folks, and whether this can be profitable for them. But for sure, a good sign that there are now options for cord cutters that are keeping them engaged with Disney's brands, if you're Disney or the other
100% agree with that point.
Definitely. Let's move on to Snapchat. Let's move on to Snapchat and its IPO. I don't know if you heard about this. Did you catch this anywhere?
Just
Snapchat
casually.
Little app. Picture messages, they delete after a while. Yeah.
Oh, the little yellow ghost.
It's all the rage. All the kids are doing it. So on Thursday, Snap Inc., the parent company of Snapchat, priced its initial public offering at $17 per share. This was actually above the expected range of $14 to $16 per share, and valued the company at $24 billion. This makes Snapchat's market debut the biggest since Alibaba went public back in 2014. We also know from our exclusive interview with Kathleen Smith of Renaissance Capital that this is going to be a mouthful, the second largest US-based tech IPO ever. Behind only Facebook, who just happens to be a key competitor for Snapchat, interestingly enough.
And we now know that so Snapchat's IPO was 12 times oversubscribed, which means that there were 12 times more orders than there were shares offered.
People were bugging out over this.
So they just investors wanted in, like, they hadn't wanted in on an IPO
quite like this in a
long time.
Yes. And I think the demand for it was immediately reflected in its trading on the first day.
Yeah.
So it was priced at $17 per share. It opened at $24 per share, 41% increase from its listing price.
Definitely.
Closed just a little bit higher at about $24.50 per share.
Okay. But fun day for the co-founders.
Fun day for the co-founders. They were on hand.
Yeah. So Evan Spiegel and Bobby Murphy. I saw the picture of them. So they rang the bell, the opening bell at the New York Stock Exchange, which is where Snap is listed. I just saw the picture of them and I'm like, wow. Not only are they so successful, so young.
Evan Spiegel's 25, I think. And Bobby Murphy's 27.
Okay. I'm just, wow, they just look so nerdy.
Yeah.
It's just so nerdy. And I'm just, wow, they got it. They're so lucky too.
The closing and opening bell ceremonies on the New York Stock Exchange are hilarious to me in this day and age. And I know it's a ceremonial thing. I'm sure he was pumped to be there. His net worth just swelled like $3 billion today. So nothing much could go wrong for him on this evening.
Yeah.
Or this morning, I should say. It was Thursday, bright and early he was there. But I don't know. I mean, I'm certainly not surprised by the demand. I'm not surprised by the success, if you will, of its first day of trading. But at $24 per share, you're looking at more of like a $30 billion valuation for a company that is still losing money, lots of money. That is in a competitive environment where, as I said, one of their key competitors, Facebook, is infinitely bigger, infinitely more users, makes way more, has way more revenue streams,
and also taking their ideas and making them successful. So I just again, kind of to piggyback off of that. So where does Snapchat go from here? So you see them creating something like Snapchat Spectacles, right? Which we talked about with Kathleen Smith last week in our interview with her, which is a good sign going forward, right? So these camera, smart camera glasses, smart glasses,
augmented reality.
And then, so is Snapchat going to be a camera company like GoPro? Are they going to be the next GoPro? Are they going to be the next?
Wouldn't be a good thing.
Facebook? They're a camera company that kind of outfits themselves as a media enterprise. But so it's who are they? Because I still think of them as, this weird kind of smartphone app that all the kids like, the kids like. So it's, again, what is their identity? Who can they be in 10 years?
Yeah, and so that's actually I think the big driver of their identity crisis is now you aren't the funny little app for the kids. Your 25-year-old billionaire co-founder is now ringing the opening bell at the New York Stock Exchange, and you've got the biggest hedge funds and money managers in the world desperate to get a piece of your stock.
Definitely.
You are no longer what the 18-year-old college freshman used to sext. Okay,
you're exactly right.
It's the big leagues now. And that to me is a big identity crisis, not just for the company but also for its users. That cool thing you did that your parents didn't know about, the way that you were communicating with your friends, all funny and things were disappearing. So you kind of had this sense of comfort, and part of that was the whole experience of being in on a growing thing while it was still unknown, kind of. And now it's definitely not that. And so if you're a user, where do you go from here? What do you expect from here? How much more can the company offer you experience-wise? What else can they do in the app? Do you care? If I'm just a regular Snapchat user, do I care about these glasses? Maybe one day. I use Snapchat every day. I don't care about them now.
Thank God they look somewhat like normal sunglasses. I will say that, because they look, I'm like, they look kind of cool.
Yeah, okay.
It's not like the Google Glass.
You didn't like Google Glass? I was just going to say, I thought Google Glass looked okay. I don't know. But you look good. In both those cases, Google Glass, which Side note, look how Google Glass worked out.
Right.
Not very well at all. So do people even really want to pay a ton of money for these camera product things? Hardware is not like snap your fingers and now you're making hardware when you're going from us being a software company.
Yeah. But again, like, who wants to carry around a piece, like a camera, when they can just carry around their phone?
Yeah,
You know what I'm saying?
Yeah, exactly. And when your experience isn't that much different when you're just using your phone. And so that's the weird thing too, is in the IPO prospectus, we talked about this a little bit, is that they described themselves as a camera company. But like, I don't know if that's just a them type of like haha thing, because it's not a camera company right now, that's for sure. And it would be hard to imagine them ever getting to a point where they're a hardware first company.
Right.
But at the same time, they now have to justify a $30+ billion valuation
To all their brand new shareholders who have no voting rights.
Yeah.
Which, side note, the SEC is looking into. I think there's a probe looking into that.
Interesting.
Which is interesting.
So
Anyways.
yeah, lots of things to think about
Questions.
Lots of things to think about with the Snapchat IPO. A monumental day on the market, nonetheless. You don't just have the second biggest ever US-based tech IPO and not talk about it. So, but anyway, I think that just about does it for this week.
Yes. Thank you so much for listening. And remember, if you think we missed anything, or if you want us to cover a different story, please shoot us an email at podcast@zacks.com. You can also check out all of our other exclusive audio content at zacks.com/podcasts.
Remember to subscribe and leave us a rating on iTunes. Thanks again for joining us, and we will see you next time on the Zacks Friday Finish Line.